Mitch DiRaimondo is a capital allocator, commercial real estate entrepreneur, and Web3 founder based in San Francisco. He leads SteelWave Digital, a real estate tokenization platform, expanding access to commercial products, and serves as CEO of eCobalt Investment LLC. Mitch began in crypto markets in early high school and is now a vocal advocate for blockchain's real world applications with appearances in outlets like Bloomberg, Fortune, and Wall Street Journal. So, Mitch, day one, what was the first thing that attracted you to crypto and how early on were you in the game?
I mean, I was in it in high school. I mean, we were trading it back in, 2012 area. Obviously, I think it's grown up quite a bit from them, but we really saw this in the early stages of it as kind of globalizing a digital economy.
Mm,
And we really want to be on the front row of it. So, me being in high school, I was into pattern recognition. I got into hacking when I was super young, and it kind of just led me down this path where I realized that this is really a market in its infancy that needed institutional money to scale. And the only way to get institutional money to scale was if you could control the risk. So I made it my goal to kind of get the institutions playing in this space and really understanding what this tech meant for big scale capital
right.
markets.
It's been a volatile journey. And yeah, I think Michael Saylor just said this recently, and it was a beautiful point. He's like, a part of what makes this a good investment is that it's volatile and that it's risky and rocky. Because if it was super predictable and you were getting X amount of return every year, institutions would jump on it really quickly. And although we want that to some capacity for early investors, kind of like that early VC stage, jumping on it in its early days is the smartest thing to do. And I'm just curious, when you first started crypto, like how much was Bitcoin going for?
Uh, my cost basis on my wallet's $63 is what we hold, just as kind of the background. So we were
That's
in it super
crazy.
early. Yeah. Um, but again,
Listen, everyone goes and says like, "Oh, if I should have bought it then." I don't know how much you allocated, but to buy at that point is almost crazy. This is something that went down 90% in a few weeks and it went up and
yeah,
down
I
and
mean, we've
it's
seen the
crazy.
good, the bad, the ugly on the uprise. But we got in it because I was like, look, if you look at what, we send letters to each other, then emails, then text messages, right? And if you look at your capital market system, it's still in that like letter to email stage. And we saw that. We're like, look, this is really, if you break it down, a globalized gold standard. And I think over the last, 15 years, it's really proved itself to be that, where it's like, okay, now all of a sudden you have a hedge to all this, fiat debasement that's going on. And we saw it early. I was like, look, if this is the case, I was going to go play D1 golf and go the whole PGA Tour route. And that was my passion. I was like, look, we have the chance here to really actually take finance, this, archaic, slow, old industry, and revolutionize it into the future.
Right.
No one's thinking like that. And for us, at the time, everyone was a retail investor, right? The guy that bought the pizza with Bitcoin, that type of stuff back in the day. But we saw it. We're like, look, if institutions can play in this space, it's going to take it so institutions all of a sudden can play on the global market, right? You're not playing in what's a private, what's a public, where can you have, what are minimums, all this other stuff. You're really just taking your investments and making it accessible to everyone.
Yeah.
And that's where we saw the value. And we kind of just jumped both feet into it.
We're talking about institutional adoption. I don't know if you agree with me, but within the past year, we're finally starting to see an inkling of that, especially with the Clarity Act and with
Definitely.
protocols
Yeah.
being set in place. Strangely, Bitcoin is performing its like worst post halving year in the cycle, and yeah, exactly. It's
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 all
it's fine,
relative, right? When your basis is low. Yeah. But
right? But what? First of all, what do you think? What do you think are the current bottlenecks for really seeing this explode and
yeah,
institutions
absolutely.
really
I mean,
start to
look,
use this?
so the moment I realized the market was broken was when, ECI in college, we were 19 years old and we tried to scale these volatility strategies in 2018. And we just kept running into the same wall. The rails were mostly retail investors. The liquidity was pretty shallow when we were trying to raise these bigger numbers. and institutional capital really didn't have a way to come into the space in a way they wanted to, where they can control the risk, right?
Hmm.
And the gap really forced this pivot, right? EC, like what we did when we graduated, we're like, look, we've run all these, volatility strategies. We understand how institutions want to get in, but the only way institutions really get in is if instead of trading volatility, we start to build bridges between like institutional grade assets and this space, right? So you're using the technology to unlock these institutional grade assets on a capital stack.
Hmm.
So when I graduated, we spun up SteelWave Digital, which is a derivative of SteelWave. And for that, we're like, look, if we can take these, big scale real estate deals, right? So SteelWave Digital is the direct contribution of the insights that took 40 years of SteelWave's expertise and brought it into this digital ecosystem. We're like, look, if we can provide an institutional grade product, we'll bring the institutions into the space. And that's what we really started doing, right? It's like, look, no family office sitting in Dubai is going to write a $150 million check if they can't underwrite the asset. That's their biggest thing. So real estate they can underwrite, and that's where we're like, look, we have that market under our belt, so let's bring it out and bring it on the global scale.
Can you talk to me more about what kind of role crypto and blockchain can play in the world of real estate?
Yeah, I mean, look, it is taking these large capital stacks, right? And it could be real estate, it could be, sports teams, it could be all these other private investments right now that like you have to have such a high minimum, 50 million, 100 million, 150 million bucks to start playing in it. And what this does is it takes those investments and really fractionalizes them, right? You're using
Hmm.
smart contracts all of a sudden to basically take it and democratize it down to your smallest investor. Um, and the nice thing about it is like for real estate, right? It's like we'll have, $1 billion deal. We've already done the underwriting. We understand the risk. We understand how it's going. We know the operations. We're really just selling our current position or our investor's position into the market. So our investor gets liquidity, but the retail investor actually gets access to something they previously wouldn't have gotten. Right.
Right, because you can use smart contracts to kind of bundle these big transactions to have a bunch of small
Exactly.
players work together. That's very, very interesting. How do you see that changing the industry of real estate as a whole?
So that is, an asset of this, right? Your retail investor gets to play. But if you really think about it, like for us on the big scale real estate side, like this is like CMBS round two.
Hmm.
Right, we can take like $100 million deal. We'll take the debt stack and we'll slice it up. Go, okay, we'll sell the first 20 million at this at token. We'll send the next 20, 20, 20, 20 down the line. And you're selling them to institutions. So like at the end of the day, like where it's going to start is family offices are going to start to play with these, $5 to $10 million stacks. Then they're going to take it and sell it down to the retail investor. But for us, I mean, look, we're
Mhm.
pitching it to our companies and our teams is this is the next way for liquidity, right? What previously was a 10, 8 to 10-year lockup period, all of a sudden you can start to use tokenomics to get some liquidity behind that position in year 2 to 4, right? So that's really the advantageous part of it to the real estate. And honestly, like for Steelwave, right? Like we'll go buy a piece of land, we'll entitle it, we'll make something super cool, Andro campus, Google, whatever it is. But the minute our LPs want to sell because they need liquidity, we got to sell the thing. So for us, we'd much rather just go, well, we'll keep it on our balance sheet and we'll sell out pieces of that to these investors that are writing, 50, $100,000 checks to then writing down to $5 to $10 checks. It all feeds down the system, if that makes
Mm.
sense.
Yeah, yeah. So on to the next. I mean, you talk a lot about building financial rails in this next cycle. What has been the biggest obstacle you've been facing when trying to build these financial rails to bring real world assets on chain?
You know, to be completely honest, like the previous administration was a big threat and a big reason why this market hasn't picked up the way it has,
Hmm.
right? Like you can have your thoughts on Trump and, we all have our own, but the people he's surrounding himself with to build this out are actual innovators in the space. So all of a sudden you're having people who have done things, who have done projects, starting to build the rails around that, where I, as an investor and a capital allocator, can bring a family office from Dubai and go, hey, you can confidently put your money into US real estate that we're going to fractionalize. And it's not going to become an issue of what's a security, what's not a security, what's a commodity, where's it going to sit, all these different things. Um, and look, it's not here now. I think it's going to take 12 to 24 months to start to actually get its way through it, right? You're going to start
Right.
with simple securities. You're going to start with money market funds. You're going to start with things that people can wrap their heads around. Then all of a sudden, you're going to realize, like, wow, this unlocks this whole private layer that no one was talking about before. And I think you're going to see companies like OpenAI, SpaceX, Neuralink. Those are going to be the ones that'll come in first. But once they realize, wow, this could be real estate, art, anything sports teams, this type of stuff that's previously been like the castle to the current king is now going to be able to be fractionalized where everyone can be a part of that castle per se. And I think that's the real unlock. Once you start to see that and the retail investor sees it, where it's like, look, I didn't have an on ramp to this before, but now I do. And that's where it hits.
I think perhaps maybe the equity market would be a good way for retail investors to be like, oh, this is moving just on chain and tokenization is really the way to go.
Oh yeah, absolutely. But you also got to think like, look, we're very privileged to be living in the US where we have these opportunities where we can put our money, right? Like if you're sitting in Bangladesh right now, like you can't go put 50 bucks into something like this, right? And that's really where the global unlock happens, right? All of a sudden
Mm,
you're taking this and you're going, look, previously, let's say you sit in, a corrupt country that, you can't go open up a bank account or whatever it is. Now all of a sudden you could put your money behind, Facebook campus or OpenAI's equity or some other piece that you previously couldn't. That's where the real value is. It's not really like going like, oh yeah, the retail investor can now trade 24/7. That's great and all dandy. But what it really does is it unlocks people that previously wouldn't have been able to play in this market.
right.
Um, and that's where we see the value. And the only way they do it is if they have, investment opportunities that, make sense.
Right.
And that's where you have to have this, institutional grade investment opportunity for them to start playing on that stage.
Interesting. So all of this sounds absolutely amazing. And some of these processes of moving like traditional finance structures on chain is already in play. And I want to get your perspective on why just retail hasn't showed up and has why is like relative to other markets like gold and the S&P 500 and equities markets, why is Bitcoin and the broader crypto market kind of not living up to its expectation in the sense where the kind of news we're getting today, if we had gotten them 2, 3 years ago, I mean, you would see just an explosion of growth in the market. And we're just not seeing that today with one good news story after the other.
Well, look, I think regulation matters, right? Like the people that are coming in and actually write the laws around this matter. And you have your retail exposure, but if you put yourself in an institutional standpoint, there's no way you're going to put capital at risk that, could face issue in the future. And that's where we're kind of at, right? It's the bottleneck. It's like, okay, now it's a chicken and egg situation. It's like, okay, when regulation comes in where international people feel comfortable to put money into that situation, that's where you start to see that unlock. Um,
Mm,
but look, it's also a building period. Like when you see the Bitcoin price go up as much as it does, like you feel that in pretty much everything in the space, and you'll get some fluff. Like there's always fluff. Look at each, boom and bust, right? 2017, 2020 to now. You're seeing a very natural market stabilization where you're starting to see some of this fluff come out and people start to innovate in the areas that actually have transactional value as opposed to
mm,
things that like look if you're doing, meme coin pump projects right now, like, yeah, your capital flows are definitely going through the floor. But if you're doing stuff like, stable coin deployments into high yielding real investments, like that's a massive market. So it really starts to feed out like who's really doing things that matter in the
mm.
space right now.
Right. And perhaps that's where the shift is. The word cryptos can mean almost anything. And I think a lot of the projects that are going to have real world application are going to shine and the ones that got these insane pumps that are purely speculative or just had, pump.fun sort of meme coins, you're seeing that come to a slow and grinding death, I guess.
I mean, look,
Um,
like you're that stuff, and I was going to name them, but look, like call it what you want, but that's a glorified casino. Like, you're not going to have some institution go, yeah, let's dump a bunch of money into that. Like, they need to underwrite it. They need to understand what the product value is, where it hits, what's the ratio, where you going, how's your exit. Like, that's the product that's coming into space, right? You're seeing stuff, and candidly, to shout out a couple groups is like, we're seeing it in real estate. We're seeing it in life insurance. We're seeing it in stuff that, actually has real world value with a cash flow. That's the stuff that's gaining traction, not your, BS hype cycle 2017 project, right?
right, right.
You can't go raise money around a white paper anymore. This isn't the Instagram traders course. This is, institutions coming in and playing.
How do you see the how do you see the blockchain world manifest itself in the next 5 years from now? I mean, in terms of real estate, in terms of real world application, what do you see kind of
Look,
becoming mainstream use case for something like blockchain?
I keep it blunt and easy. Anything that tracks and stores and sends data, blockchain will revolutionize. It'll make it more efficient, it'll skip in middlemen, and it'll make it so it's an algorithmic system as opposed to people putting it into an Excel sheet. And across the board, that's going to make a bunch of people pissed. Why? Because you're going to take out these inefficiency blockers, right? Let's look at title insurance. There's no reason for title insurance, right? You're basically just paying someone to go look at a ledger to tell you, oh, yeah, no, you own this
Right.
building, right? That's the type of thing where it's like, look, it's not it's not getting rid of jobs, it's reallocating the jobs to things that matter.
Correct. You're 100% right. Like the efficiency with blockchain is just going to revolutionize the concept of efficiency. You normally have like 50 people to screw in a light bulb with 8 different middlemen who are almost doing work that's completely pointless. But here's the weird part. A lot of those middlemen or a lot of those people have built their system on this inefficiency intentionally because they make themselves relevant.
Well, they
And
make
those are the ones
fees, they make
those are the
money.
ones who also have the most power. And
Of course.
it's not going to be a smooth transition. I mean,
They're going to be
these people
pissed.
are going to fight it until they're going to try to take it over.
And that's why the US will be last. I hate to say it. Like for us,
Mm,
full disclosure, we're looking at buying international soccer teams. And we'd love to do a US team, NBA, NFL, whatever it is. But the problem is you're dealing with all these middlemen that it will be the last one to fall. You'll go international, you'll get international money into the international team and then offer it internationally. And then they can look at it and go, oh, wow, that's a great idea. But if you tried to bring it here, you would get sued 7 ways from Sunday because you'd be
mm,
taking their fee lines. And that's the biggest thing is like, look, the people that complain the most are probably the people that are getting paid the most in the process, right? Inefficiencies will always allow people to make money to correct them, do what you want to do, but you can't have an inefficient algorithm. 1 plus 1 will always equal 2. You don't need someone to tell you that,
right.
right? And that's the difference.
Right. It's you're 100% right. I mean, it's common sense that it's a parsimonious assumption that humans are going to flow towards a more optimized, better state. The same reason why this next iPhone is better than the one before it. We're constantly optimizing, becoming more efficient. There is an unnatural external force here acting on this process that it's like, I mean, it makes sense. They fight it tooth and nail. I mean, there are people who
And so would
control,
we, right? It's like, look, if you're coming to take my felines, I'm not going to be happy about it.
right.
So that's the biggest thing. You got to think it's like this is natural market cycles. This isn't something new. And the difference is, and this is the thing with crypto that I want to drill in. Crypto is the same thing as TradFi, but we just renamed a bunch of stuff to make us feel smart. It's like, guys, it's the same thing. If you break it down in TradFi firms, like you go sit down with an
Right.
80-year-old guy that works at Bank of America and you actually tell him, okay, instead of saying, oh, we're going to get you a yield, it's like, well, what is that? Well, that's a current return, right? It's like things like that. It's like,
Right.
okay, all of a sudden you're starting to connect the dots. And that's the thing. It's like, it's education. Half my job is educating these people around what the options are.
Right, but do they even care, or does it even matter how it works, how blockchain works? They don't care about any of that stuff. Do they know how an email
The
works? Do they
ones that
understand?
care,
Do they care like about the TCP/IP protocol behind sending and receiving emails, or SMTP? No, they care if you send the email and you get it. And I think like the best way to kind of convey this stuff to people who aren't in the industry is, hey, what metrics do you consider valuable when you're sending money? Speed, cost, reliability, blah blah blah. And he's like, hey, like this does it. This outperforms that metric, these metrics in every single capacity. The argument is like, why wouldn't you want to move to a system like this? It's unfamiliar, sure, but that's really the only hurdle. It's just like we stick
100%.
to what's comfortable rather than what's logical.
And that's the thing. The biggest competition I have when pitching family offices, sovereign wealth, whatever it is do nothing. It's like, why would they do this and risk, their job, they've
Right.
already made money, right? It's like you just do nothing and they're fine, right? But you do this, all of a sudden you put at risk, and that's the biggest convincing thing we've faced. And
Yeah,
look,
because
I
this is a
think
project that's like longer term, and they're kind of like probably operating under the MO. If it's not broken, I'm not going to try to fix it. If I'm making
exactly,
money, people are happy. I'm not going to deal with this extremely risky emerging industry that is rife with issues and rug pulls and even like the October 10th situation. Like people kind of don't want to deal with that. They're like, I'm not going to put my job at risk, even though this is a
of
great thing and
course,
it's going to be the next biggest thing in the next 20 years. I don't care. And even like, and this concept trickles down to lawmakers and even in a broader sense to human nature, right? Like we're not going to worry about something that's going to be great in 20, 25 years from now. We really care about today.
100%. I mean, look, we compare this to the dot com boom. I mean, look at what SoftBank was doing back in the day, right? Everyone called them nuts, and their Alibaba positions, almost 200 billion plus right now. Right? It's these things that the people that see it coming down the pipeline will be the leaders, and it's more so how long they can stay that right position before they
Mm,
run out of money. And when they run out of money, another person comes in, fixes that void, and they do the
yeah.
same thing, round two,
Yeah.
right?
Well said.
It,
Yeah. Well, most people focus on building products in the crypto realm, and you've kind of looks like you focused on building markets. So walk us me through that decision process, and how do you see your company in 4 or 5 years from now?
I mean, look, we building a market because there wasn't a market to exist in, right? Like our product size is so big that we're like, look, we're not going to go out and launch some meme coin around it. The contrarian call was refusing to build a token first. Everyone in the space starts as a token because it's the easy capital and fast attention, and we did the opposite, right? We're like, look, let's build an institutional grade vehicle before touching token design because we wanted liquidity to sit at the real estate level, not the hype to sit there, right? We're like,
Mm,
look, we're going to have our money behind our asset, not the hype, not all this other stuff. And then we're going to take that asset and then we bring it into the market to get liquidity behind our investment originally, right? We build investment grade vehicles that no one else is really bringing into the space because there isn't pockets for it, and we realize that. We're like, look, we know the money's not there right now. W- we know that now execution for 100 million or a 2.5 billion dollar deal on chain is way out of pace, but institutions can still underwrite it, right? And they see that and they know that and they're seeing that it's coming in. You're starting to see people go, okay, we know it's here. If we don't move, we're going to be left behind.
mm,
And that's the biggest fear, right? We're like, look, we had to spin up an international entity just to even start thinking about this, right? Now the regulations coming into the space, we start to see it. But, back in the day, we're like, look, we have the opportunity here to kind of sit with the regulators, sit with the institutional investors and go, okay, what do you need? What do you want liquidity around and how that's going to work? And that's not a product, right? I got 10 different products I could pitch you right now, right? It's more so like, okay, where's your capital? What do you want? What's your risk? Where does
right.
it sit? What's your, timeline? All that type of stuff. But that is the founder traditional finance mindset that's very lacking in this space because everyone wants that quick dollar.
Yeah. You've had a front row seat to the regulatory shift, capital flow changes, and the rise of tokenized private markets. What mindset do founders need today to navigate the environment without getting distracted by all the short-term volatility?
I mean, founders need to internalize that regulatory clarity is not a threat. It really is the unlock that brings real capital off the sidelines for them to start playing with, right? They need to stop optimizing the next pump and start optimizing for the next decade. Right? You can't go, okay, what's the next hit?
Right.
How can we scale this? Where's it going to go? And the market's really shifting from speculation to infrastructure, right?
I
That's the
agree with
biggest
that.
thing is your infrastructure line is going to be high, and your volatility is not the enemy, right? It clears the field and it forces out a lot of this fluff, and it leaves room for teams solving real institutional problems to succeed, right? That's why you see this downdraft in a lot of this BS projects in the space. And the founders who win will be the ones who build the moment when Bitcoin becomes the reserve asset institutions are required to hold, and real world assets are on chain for them to trade as a default to that, right? And the biggest thing is noise fades and rails endure. That's what I
I love
tell my
that.
team every single day.
Noise
I'm
phase
like,
and rails endure. It's good.
yeah,
It's a
it's
good
like,
title
look,
for this
if you
podcast.
if
That's
you
great.
if you build the rails, they'll sit. But if you build the hype, that's gonna have holes in it. It's only gonna last so long, right?
All right. Good stuff, Mitch. Mitch, how can people get in touch with you?
I'm on Twitter, my name, Mitch_DiRaimondo. And then on LinkedIn, our website, I'm on my email. We're bouncing around a bunch of conferences. So we're all around. Just, reach out. I'm happy to connect.
Mitch, it's been a pleasure talking to you. Thank you for your time.
Much appreciated. Thank you so much.